Donald Trump imposes sweeping reciprocal tariffs on imports, a decision that's already rattling economies around the world. And there's been plenty of reaction to Trump's announcement from around the world, mainly anger and dismay. And we have our correspondents around the world to discuss how countries are reacting to what is increasingly looking like a global trade war. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. US President Donald Trump has reshaped global trade, announcing a minimum baseline 10% tariff on almost all goods coming into America from nearly 200 nations. Many nations will have to pay a lot more. He's slapping additional tariffs on countries with the biggest trade imbalances with America. Trump wants to bring manufacturing jobs back to the US, but he risks upsetting long-time international allies and possibly economic pain for American consumers. Andy Rosejan has the latest.
As President Trump announced a 10% universal tariff on 185 nations, he talked in apocalyptic terms, as if the U.S. were at economic war.
For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike.
Besides the baseline tariffs, the White House also looked at dozens of nations that have the biggest trade imbalances with the U.S., calculated how much they are charging for incoming American goods, and decided to hit them with reciprocal tariffs of half that number. Trump said he was being benevolent.
I call this kind reciprocal. This is not full reciprocal. This is kind reciprocal. But what we do is we cut it in half. If you want your tariff rate to be zero, then you build your product right here in America.
We've never seen anything like this before. It is the most aggressive tariff move since the Great Depression.
Economic globalization over the last 70 years has brought cheaper prices for American consumers, but U.S. manufacturing jobs dried up as companies moved plants away to cheaper locations. Trump says he wants those jobs back. But economists have their doubts, pointing out that manufacturing jobs mostly dried up because plants became more automated, which allowed workers to move on to better jobs. Economists also think American consumers will see increased price pain. Even Trump has acknowledged at least a temporary pinch. The question is, how much will consumers be willing to tolerate on the promise of more manufacturing jobs? And with Trump smashing through decades of established international trading rules, will other nations now do as he has done, going it alone to form new alliances and new adversaries?
We have seen in the past week long-standing notorious enemies, Japan, China, and South Korea, unite in their desire to retaliate against the U.S. for the tariffs as they were anticipating them. That's mind-boggling.
One thing is for sure, the Trump administration is making clear that if any of these 185 nations decide to fight back with higher tariffs on American goods, the U.S. will respond with even higher tariffs on them. Andy Rosejan, TRT World.
World leaders have been reacting to Trump's announcement of sweeping global tariffs. European Commission President Ursula von der Leyen has come out opposing the tariffs and believes this will have immense consequences on a global scale.
President Trump's announcement of universal tariffs on the whole world, including the European Union, is a major blow to the world economy. I deeply regret this choice. Let's be clear-eyed about the immense consequences. The global economy will massively suffer. Uncertainty will spiral and trigger the rise of further protectionism. The consequences will be dire for millions of people around the globe, also for the most vulnerable countries, which are now subject to some of the highest US tariffs.
The unilateral action that the Trump administration has taken today against every nation in the world does not come as a surprise. For Australia, these tariffs are not unexpected, but let me be clear, they are totally unwarranted. President Trump referred to reciprocal tariffs. A reciprocal tariff would be 0, not 10%. The administration's tariffs have no basis in logic, and they go against the basis of our two nations partnership. This is not the act of a friend. Today's decision will add to uncertainty in the global economy, and it will push up costs for American households. This is why our government will not be seeking to impose reciprocal tariffs. We will not join a race to the bottom that leads to higher prices and slower growth. We will stand up for Australia.
We're in a situation where there is going to be an impact on the U.S. economy, which will build with time. In our judgment, it will be negative on the U.S. economy. That will have an impact on us. But the series of measures will directly affect millions of Canadians. We are going to fight these tariffs with countermeasures. We are going to protect our workers, and we are going to build the strongest economy in the G7.
Asia-Pacific markets plunged on Thursday after US President Donald Trump imposed hefty reciprocal tariffs on more than 180 countries and territories, several of which are in the region. Japanese markets led losses, with both the benchmark Nikkei 225 and broader Topix sliding more than 4% at open before slightly pairing losses. Hong Kong's Seng index fell around 1.5%, while mainland China's CSI 300 was down 0.6%. In South Korea, the Kospi index fell 1.2%, pairing losses from over 3%, while the small-cap Kosdaq was down 0.2%, and Australia's S&P ASX 200 was down around 1%. Meanwhile, gold prices hit a record high to trade at above $3,167 as investors flocked to the precious metal. For more on this, we're joined by Hassan Fawaz in Doha. He's chairman and founder of Give Trade. Good to have you on the program with us, Hassan. Now, markets have been awaiting this announcement. So has the reaction been in line with expectations?
Well, it's been in line, and more than that. I think we have a real problem at hand, because the only certainty we see right now is uncertainty. You need to remember that the US runs a trade deficit with all its trading partners, and this seems to be impacting other countries more than it will impact the US eventually, because even if the reciprocal tariffs were half what the US is already charged by these countries, you have to take into consideration that it will cover a bigger amount of goods, because the US imports more than it exports.
Right, and we're seeing significant declines across Asia. How has this shaken the region's economic stability and investor confidence?
Well, most of US's the two main trading partners of the US are Japan and China, and South Korea. So it's very normal for us to see all of that happening, because the investors are bracing for impact, because now these countries have to look for solutions to bring down that tariff rate, or secure alternative markets to make up the profit margins that they will lose, because this will impact their GDPs in a significant manner.
Right, and gold prices have hit yet another record high as investors are seeking safe haven assets. How do you see this trend continuing going forward?
Well, risk sentiment is high, as we always spoke before, and I spoke about that in your program, that gold is going to surpass 3,000 in the first quarter. It's very normal for us to see the price of 4,000 this year, because risk sentiment is really high. And I think everybody's talking about the US entering into recession. I think that the global economy is somehow in a recessionary environment, and there's no need to talk about a recession anymore, because we are heading to a recession with the current trajectory of things. But The thing is that the Federal Reserve, of course, is going to intervene. They're going to be forced to cut rates as soon as possible, considering what's happening right now. And even with that, gold prices will continue to surge because, when Federal Reserve cut interest rates, gold prices also go high. So I think the only trajectory for gold this year is up because market sentiment is a very risky market sentiment. There's a lot of things that are fueling investors into piling up gold because it's very hard to take decisions about other things in the market. Crypto is a very risky environment to invest in. Stock market has a lot of volatility. The only stable asset seems to be gold right now.
Okay, Hassan Fawaz in Doha, we will have to leave it there. Thank you very much for being with us.
Thank you. Thank you.
Japanese officials have called the US tariffs extremely regrettable and that the more than anticipated 24% tariffs should be reconsidered. The Bank of Japan Governor Kazuo Ueda cautioned that the tariffs could drive inflation higher and slow economic growth. Japan's Nikkei share average slumped to an 8-month low after the tariffs news, while the yen strengthened more than 1% against the dollar as investors flocked to the safe haven currency. Our correspondent David Caprara is in Osaka for us. David, now Japanese stocks are leading losses in Asian markets, so clearly investors are spooked. How severe of an impact could this have on Japan's export-driven economy?
Yeah, pretty profound effect, that's right. Basically, Japan's automobile industry in particular makes up around 8 to 9% of all employment in Japan. And in general, there's sort of a sense of betrayal. Japan and the U.S. have this very strong bilateral relation that has existed for a decade since the end of the Second World War. President Donald Trump is a big fan of Ronald Reagan. The longest serving ambassador to Japan, Mansfield, who is the ambassador during this time, described this relationship as the strongest bilateral relationship on the planet, bar none. And there's a lot of head scratching now in Japan right now of where these numbers exactly are kind of coming from in terms of these alleged tariffs that Japan's been imposing on the U.S. to prompt this. But a lot of confusion here and a lot of sense of betrayal.
And given Japan's significant investment in the US, how might these new tariffs impact Japanese companies' future investment decisions and operations within the US?
Yeah, Japan's investments in the U.S. are huge. By many measures, Japan is the biggest foreign investor in the U.S. period. Automobiles are a very big element of this, and I think that moving forward, there's going to be a lot of uncertainty of how to proceed. But the idea of kind of Japan decoupling from the U.S. is just really not an option with the current realities of the world today. And I think the effect of Japan and effect of this is to sort of brace for the impact and try to ride the storm.
Right, and David, you mentioned the auto tariffs. What strategies might Japanese automakers employ to mitigate these challenges?
Yeah, there are certain complaints that can be filed with the World Trade Organization and things like this, but we all know that Donald Trump, the way that he sort of regards these sort of international agreements is with a grain of salt. And I think that this is a world, the way in which to interact with the U.S. is one in which only real effects, such as retaliation, might be able to kind of have any effect here. But this really is not an option for Japan at this point. I think one thing Japan has tried to reiterate over and over again is that it's already investing heavily in the U.S. It's not, when you see a Japanese car on American roads, it's not that Japan is just importing these and pushing this into the U.S. Japan has over 10 manufacturing plants in the U.S. And has emphasized this many times with President Trump. It employs hundreds of thousands of Americans. It just created in North Carolina a $14 billion battery factory that's going to employ over 5,000 Americans. And I think emphasizing this over and over, these strengths that already exist, this isn't Japan taking advantage of the U.S., but providing opportunities for the U.S. is something that Japan is kind of the best tool in Japan's toolbox at this point.
Right, David Caprara in Osaka, thank you for that update. Now, China is hitting back at the US's new reciprocal tariffs, warning they will hurt global trade and vowing countermeasures to protect its interests. Trump has announced a sweeping 54% tariff on all Chinese imports, escalating tensions between the world's two largest economies. The move adds 34% in new duties on top of an existing 20%. A spokesperson for China's Commerce Ministry argues the US has long benefited from trade and warns that history shows tariffs do more harm than solve problems. Beijing is urging Washington to cancel the measures and resolve disputes through dialogue. And for more, Adam Hancock joins us from Singapore. Adam, we've heard that Beijing has asked Washington to cancel these measures. How are these 54% tariffs going to impact China's already sluggish economy?
Well, they really couldn't have come at a much worse time for China. As you mentioned, the economy is struggling. They're having this prolonged property crisis, still high levels of youth unemployment and a real lack of confidence from domestic consumers. And what that has meant is that China has had to rely heavily on its export market in order to meet its growth targets. And the US is one of its biggest partners when it comes to exports. China is still seen as the world's factory floor. But now businesses in the US, when they see the size of these tariffs that have been slapped on China, they're going to look elsewhere in terms of buying goods. So that is going to hit the export market hard. Therefore, that's going to add to the slowdown in China. A lot of businesses are going to struggle. More people may find themselves unemployed. And it means the governments are going to have to do more to try to boost the economy internally, try to increase confidence amongst consumers. And there's now going to be even further calls for more fiscal spending. There were some announcements at the Two Sessions annual parliamentary meeting earlier this year. But now Beijing really will have to do more to try and boost growth this year.
And China's Commerce Ministry has labelled these tariffs as unilateral bullying and vowed countermeasures. So what specific retaliatory actions could Beijing consider to protect its economic interests?
Well, they may consider slapping their own tariffs back on the United States. That wouldn't be the first time that they've done this in this escalating trade war. You might remember a few weeks ago when the United States put 20% tariffs on China. China hit back with tariffs targeting the agricultural sector. They were very targeted at the time, but maybe now China will ramp things up and go for their own tariffs that target all imports from the United States. So that's one option, is basically copying what the US is doing. They may also look to limit access to rare earth minerals, which are very important for technology and defense technology as well. They might restrict access to that for the US. They may also look to crack down on US companies that are operating in China, and there are many of them, and many big ones. Think the likes of Apple, for example. They could try to make life more difficult for those companies in the United States. And one other way they could hit the US is by restricting Chinese companies from directly investing into the United States. So there are plenty of options on the table at the moment for China in how to respond to this.
And Adam, given China's emphasis on resolving trade disputes through dialogue, how feasible is a diplomatic resolution with the US under this current environment?
Well, it's not looking too promising right now. President Trump certainly doesn't seem keen to talk and try and negotiate on these tariffs. In this region alone, we've seen countries like Japan and India. They've held talks with trade officials in Washington to try and get exemptions on these tariffs, but none of those talks seem to have worked so far. So it's hard to see at the moment a situation where officials from Beijing and Washington are sitting down and trying to negotiate getting rid of these tariffs through dialogue. Obviously, China has been a long-term trade foe of the United States. There's a lot of history here that during the first Trump administration, he went after China. There was that big US-China trade war. So there's a lot of history here. I think the only real solution in terms of dialogue could be a potential meeting between President Trump and President Xi, which has been mooted for some time this year. And also the US are looking for China to do more to restrict the flow of fentanyl out of China, which is heading towards the US. So that's possibly where they could find some level ground. But for now, it doesn't seem likely.
A lot of history there indeed. Adam Hancock in Singapore, thank you very much. Now, Trump's tariffs also include a 26% levy on Indian imports, citing India's high duties on American goods. India's Commerce Ministry called the impact a mixed bag, not a setback. Exports hit include electronics, gems and jewelry, putting over $23 billion at risk. But Indian experts say the tariffs could be a chance to boost local manufacturing and push for a more self-reliant economy. Meanwhile, both sides are still working on a trade deal aiming to finalize the first phase by fall 2025. Let's cross to New Delhi now, where Smita Sharma joins us. Smita, the White House has imposed 26% discounted reciprocal tariffs on India's 52% tariffs. Would this prompt India to lower its own duties on US goods?
You know, we have been seeing a range of reactions coming in from global capitals, ranging from fury to dismay. I think Indian reactions are going to be different because in the run-up to, we saw India already by itself lowering a lot of duties on products like cranberries, almonds, or bourbon whiskey, for instance, that it has been importing from the United States. We are not possibly going to see some sort of a confrontational reaction from India because there is really too much at stake here. US is India's largest trading partner, largest export market. India wouldn't want to rock that boat completely. The formal reactions are still awaited from the Commerce Ministry, the Finance Ministry. The Parliament session is on. Prime Minister Narendra Modi has just a short while ago landed in Bangkok for the BIMSTEC summit, where he will be meeting a host of regional leaders too, including, the possibility of meeting the junta leader from Myanmar too. But so Indian reactions will take a time to come in. India is looking at the larger picture here and pointing out to some of the silver lining, the fact that pharmacy has been kept out of the tariffs list right now. Semiconductors have been kept out. They do say that the 10%, of course, uniform tariff imposition comes in on 5th of April and the remaining 16% on 10th of April. There will be certain sectors, certain items, exports, say, for instance, seafood, rice, that will be affected adversely. But India is also pointing to the higher, in fact, tariffs that have been placed on other South Asian countries, be it Bangladesh to Sri Lanka, ranging from 37 to 44%. So weighing in on whether it gives India a competitive advantage in certain sectors, perhaps, say, for instance, textiles, because, at the end of the day, when exports get more expensive, the cost of it will be passed on to the American consumer too. And then the American consumer would want to go in for a market which seems more cheaper, more reasonable. So India will have to also brace up for that, in fact, reduction in consumption capacity overseas in a lot of these sectors, including gems, jewelry, where we are preparing for job losses.
Right, Smita Sharma there in New Delhi with the Indian reaction. Thank you very much. Now, President Trump's reciprocal tariffs are also hitting developing countries, particularly in Africa. Lesotho, a country that Trump said last month nobody has ever heard of, was hit with 50%. Madagascar with 47% and Botswana with 37%. Africa's largest economy got away fairly lightly with a 14% tariff. As Africa's largest oil producer, Ibrahim Shehu reports on how this will affect Nigeria.
Like many African countries, Nigeria may not be on the firing line for U.S. tariffs for now. That's because its trade with the U.S. was worth about $10 billion last year, according to American trade data. Nigeria exports crude oil, cocoa, cashew nuts, and animal feed, and imports vehicles, wheat, machinery, fuel, and plastics from the U.S. Analysts say the country could expand its exports, particularly in agriculture and processed goods, by taking advantage of government efforts to devalue the local currency, the naira, in order to attract foreign exchange and boost trade.
The devaluation currency actually have been a good one for exporters and myself. I export value-added agro products, processed food generally, that's what I export. I'm a merchant, meaning I don't have a factory. I have a number of SMEs that produce different products.
Nigeria is also looking to expand its markets and boost currency swap agreements with China and Russia to ease transactions for exporters. Experts are calling for swift regulatory reforms and investment in infrastructure to ensure that Nigeria does not miss out on this global realignment. Official statistics show that in 2023, it shipped nearly $670 million worth of cocoa beans, while chocolate exports were just over $27 million. Soybean exports, however, are on the rise and are projected to jump from 7,000 metric tons in 2024 to 212,000 metric tons in 2025, according to the U.S. Department of Agriculture. This is due to lower domestic consumption and higher export demand for Nigeria's non-genetically engineered beans.
Nigeria can increase its forex earning from soya beans alone. After all, we have a lot of deal with China to come and build in Nigeria, right? So we can say, China, look, why don't you pledge to buy at least $10 billion worth of soya beans from Nigeria?
China remains Nigeria's largest trading partner with a two-way trade of over $20 billion, according to last year's government figures. Authorities say they are charging higher import duties, investing in local manufacturing, and pursuing new trade agreements to try and protect the economy from the ripple effects of the U.S.-China tariff war. But Nigerian exporters say they face tough competition from cheaper Chinese goods, raising concerns over whether these measures will be enough to safeguard local businesses. Ibrahim Show, TRT World, Abuja, Nigeria.
Well, that's all your business news for now. Thanks for watching.